Good afternoon, everyone. Welcome to Monday, the 7th of January, the start of the first full week of the new year. Hopefully, we're going to see desks being manned fully and liquidity come back in spades. Not too busy this morning so far in the European session. Market's pretty dead, bit tight ranges. We've got sort of what have we got? 30 odd pips, 40 odd pips in euro dollar. Dollar yen looking quite tight as well, though we've seen a bit of a move off of 108, and that's what I'm going to talk about today. What I'm looking for here is dollar yen to see where the next range is going to be. This pair loves to consolidate, it loves to find a range and sit in that range for quite a while. We've seen historically, going back over the last year or so, we've got this range here, 114.50 down to 108. We've had various periods where it's touched, it's found support. We've had the odd break underneath. Again, up here, we've got these highs constantly keeping this price in range. And it's been a good range to trade. Now, with the flash crash last week, we've got to see whether that's broken anything at all. At the moment, we're back above 108. 108 is the definitive line in the sand so far this week. We found support there this morning. As been noted on site, we've known that there's official and semi-official bids down at 108, perhaps from some of the large Japanese pension firms. So this 108 level is key for the direction at the moment. While we stay above, then we potentially keep this range up here. We keep this 108, 114 range in play. If we move below, what we then need to look for is whether we see another range develop, and that's marked there. We saw the low come in around this 104.50 area. Depending on what platforms you look at, you might have different lows on that. But there's no shock to see that it came in against the prior low there. That's where the price found buyers. Obviously, there's something down there, which is why the price down there. As I say, some of the interbank platforms have lows of 104.10, but it's a bit flaky. It's one of those things. But I've got three retail providers that have got lows around this same area. So this is a level that I've had in my charts for a while. We can see it had some action back in 2016. This is the sort of area I'll be looking for another consolidation phase. We may edge down even lower, down towards the 100. That'll be a really big level down there. So if we do get a move down towards the 100, that's where I'd expect to get some significant support. That would also widen this range up quite a bit because, we tend to have a fairly wide range. This at the moment, 108 to 104.50, 350 odd pips, whereas this range is, more 650 pips. That's the sort of size of the range I'll be looking for. But to the downside, would have to let that develop. So this 104.50 area is just one area I'll be looking to see a range develop. If we come below there, then I think we're looking at the 100 mark, down around there, which would give us a bit of a better range to look at and more in line with the range above. So we'd get something more, that sort of size, which is pretty much matches these two here. So that's what I'm looking for at the moment. I like a long off the 108 area. I bought a break last week, which failed as we came back down under it. That time the situation was that the market was still a bit undecided, so it wasn't a clean break, wasn't as clean as I wanted it anyway. But I still fancy it from the long side at these levels here. We know there's going to be interest down in the lower end because we've heard previously that Japanese players are looking pretty much at the 110, 120 area, that sort of thing for their businesses. And of course, we can't rule out any intervention if we see any volatile moves, but it has to be volatile moves further down here. The Ministry of Finance, Bank of Japan, they don't just jump into 100 pip moves, but they will be looking in earnest at things like the flash crashes. The fact that it's a one-off last week isn't going to concern them. Hasn't concerned them, as we heard. They've paid it very little lip service. But it's volatility we're looking at. So if we do get a volatile move down here and it, eggs down and we get 200-300 pip moves a day, that's when we'll start getting the intervention chatter ramping up. So just to summarise, what I'm looking for now is to see how this 108 level develops. If you want to trade it, then you can trade off close to 108, keep a stop tight, maybe under 107.80. If you get confirmation of a break below, again, you can trade short into the 108 level with a stop maybe above 108.20. Perhaps if you want to push it to 108.40, but I'd look to keep it really tight and look for the confirmation that we're holding the level whichever way it's going. That's the way to play this pair at the moment. Pretty simple, one line, go with either break on either side of it, and that's trading simplicity in itself. And I wish you a good day today.